Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Wednesday, everyone. And where's my coffee? Oh, that's right, I drank it all. So I am caffeinated, ready to dominate. Great to see you all. A couple things before we kick off our question and answer. Where are we in terms of today's psychology? Take a look at forexfactory.com. It doesn't matter, quite frankly, where you're getting your economic data. I don't want you feeling it's got to be Forex Factory, but it's a free site. It's great. It's a global calendar. Trading economics is great as well. Some of you said, hey, Rog, we can pull that from within our trading platform. Awesome. But remember that oftentimes there are going to be, and let me grab my drawing tools here. Oftentimes, there are going to be events that happened either the evening before, say in the Asian session, or even the morning before the bell rings that is going to change market psychology. Oftentimes, it's things like PCE, CPI, initial claims, non-farm payroll, GDP. Today, we've got Kapowell. When Kapowell is on the schedule, well, we don't call him Kapowell for nothing. Anytime he's going to speak, frankly, in this environment, anytime any of the voting FOMC members are going to speak, we're going to have the potential for any kind of insight into what they're thinking about rates. And that is going to move the market, not just the equity markets. It's going to move bonds. It's going to move dollar. It's going to move euro, right? So we want to keep an eye on that. And of course, let's take a look at what has happened in the aftermath. We're going to go to a 5-minute time frame. Now, the way you gauge, the best way to gauge understanding the reaction to an event is mark, if you want, if it's easier for you to visualize. I know it is easier for me. Put a little line, on the chart and say, hey, this is when we are expecting some sort of event to hit the market in terms of a scheduled event with high impact, high volatility, aka what I call and have called for years a hot zone, right? And so when you've got an economic event that on Forex Factory is colored in red, now you see where I sort of thought about hot zone. It's red hot, yeah? And we look for the reaction. Dollar, pretty muted. I'm looking at the 6E for a view into the dollar, but I can see that the dollar has been heading lower ever since the European and UK Open. Awesome. We're short FXE. Well, we're long puts in FXE. We're short the 6E futures. This is great. Not a lot of reaction since Kapowell, but clearly heading in our direction. Okay. What about bonds? What did the 10-year do? Right? We would look at the ZN. And I'll tell you what, 10-year was sort of floating higher. Here's that same 8 o'clock. And then it's sort of chopping. It's been chopping since about 6. So Powell didn't do much either way, quite frankly, with that. All right, then we head on over to what's been going on with the indices. For me, the focus is the Nasdaq. Now, if you caught the free video from last night right here at the Simpler Trading YouTube channel. By the way, after the show, back at the Simpler Trading YouTube channel, you will see that we are live. This is for non-members or members who've never checked out our day trading room. We're going to be live streaming from the day trading room today. And at 10:30 Eastern, I'll be taking you all, I'll be in the day trading room today. I'm not usually in there, but I'll be in there today, and I'll be with you all. So if you've never checked out our day trading room or you want to join me for another session, if you want a little bit more Raghee, That'll be at 10:30. Check back at the Simpler Trading YouTube channel for that feed. All right. Okay. So what's happened since Powell? Not much. We've already seen since 2 a.m., 3 a.m. European UK Open. We've been heading lower in the Nasdaq. And if you checked out the free video from yesterday, I've been talking a lot about the fact that the Nasdaq has been the more bearish of the indices. In fact, the most bearish of the indices. And we're actually testing the equator, as I like to call it, the 200. There we go. The 200 exponential, right there. The 200 exponential moving average. And, when we have resistance sitting at a technical level, I think some chartists or technicians get kind of tweaked when anyone sort of implies that there is a self-fulfilling prophecy to indicators. I think that's amazing. I think when I know that there's such a broad group of traders with a understanding of what a particular secret squiggle on a chart is communicating, that they're going to respond in a certain way, that's fantastic, right? So I don't know why technicians get bent over that. I think it's great. It's where sort of the math of the secret squiggle and the psychology meet. It only makes the level more powerful, which is another reason why I don't like to get too cute with settings on our secret squiggles. We really do want to measure sort of this broader expectation of what does an overbought stochastic mean? Or what does a 12-26-9 MACD? These are, things that I think when we're measuring them in ways that reflect a broader psychology, it just adds more meaning, more reaction to that level. A 200 exponential, a 200 simple is very powerful. I prefer the exponential, which weights more recent data, more recent closes more heavily than older closes because, well, it's in line with a very powerful cognitive bias, which is the recency bias, right? So anyway, that's where we are this morning in a lot of the markets that we have exposure to. And so as always, let's go ahead and jump into the questions. That is what this show is all about. And a quick reminder, it's winding down. Our promotion for joining me in the Sector Secrets Mastery ends Friday. First bonus session is on Monday, next Monday, less than a week from today. So want to make sure nobody misses that. If you've been wondering, hey, I want to see what you're doing. I want to see what your trades are like. I like the show, but where's the rubber meet the road? That's where it happens. All right. Okay, so let's get to it. Hey there, Gwen. XLI. Sure, let's start there. But specifically 3M and GE. Sure. So what is the overall market trend of the XLI? It's chop, right? But it's chop that at the moment is north of the 200, right? So I would say some interesting volume zones. Got an interesting volume zone as support right there. All right, got an interesting volume zone as resistance right there. So just kind of pointing that out. All right. So you want to know specifically, though, 3M and GE. Cool. Downtrend, short the rip on 3M. GE, bearish hemisphere. But on previous visits to the 200, exponential, it's really not been where the reaction's at. Sometimes you're going to notice, gang, that the simple moving average is in play. So I would say in this particular situation, you want to pay attention to the SMA. You'll notice the Nasdaq is paying attention to the EMA. GM is paying attention, or GE, sorry, is paying attention to the 200 SMA. Doesn't hurt to have them both on there. They're both psychologically significant. Interesting volume ledge right there. So I'm bearish both of them. All right. I'd look for short setups. All right. Moving on. Next question. Mike asks, are risk management and position sizing rules different for day trading? For futures, it's a little bit different because of leverage. For options, no. So I say it's different for futures because, actually, the simple answer is no. The simpler answer is no. I want to always know what a trade, if it goes against me, means in terms of loss to my overall account. That's probably the bigger thing when it comes to futures. For options, I can be a little bit more specific to position sizing relative to the options that I'm buying in day trading, and then also the effect to the account. So very similar, yes, but with day trading futures, it's more emphasis on the account risk than individual trade risk. All right, next up, can we take a look at GLD? I missed the agro entry. Hey there, Carrie. So yes, for those of you that have been watching gold, it's still in the zone. It's not too far. Keep an eye on it. I don't think this ship has left the dock yet. It's nearby, but yes, the trigger on this one. So if we can revisit that trigger, Carrie, then yes, go ahead and enter the trade. We haven't hit the first target, so it's still valid for entry. So just keep that alert out there as I teach you all to do. Wait for it to get close and then see if you can't get that entry. All right. All right. Moving on. Can we take a look at the RTY? Sure. Can we take a look at small caps? You bet. I am generally speaking, so my favorite short, the one that's been working best for me, has been shorting the rips in the Nasdaq into resistance. Second to that is shorting the Russell. Russell's still below the 200. Start with that equator, 200 exponential. And then Russell is actually trading at actually an interesting little Darvis zone here. So there's your one Darvis level right there. So there's your Darvis zone. So I'm using this level right here. These are all pre-drawn, by the way, gang. These are the Darvis levels. You can go grab at countdowntrader.com, Darvis 2.0. I'm running Darvis 3.0 signals, but you'll get the same lines out of Darvis 2.0 sans the signals. So, by the way, these are the signals. Okay, so we're in the zone, and then take a look. Enduromom zone, bearish expectation south of the equator. Overbought slow stochastic. We're at the high or the 80 level, right? So this is where I'd be looking at the market to sink back down into the range. Long IWM puts, short RTY, long RTY puts. I'm looking for small cap to just sink back down into the range. Maybe make a 50% move. Maybe hit this point of control right around 2010 as a target, and that's right there in the halfway mark. So that's actually a really good looking potential setup here. Actually, I do like that one quite a bit. 50% and the point of control, perfect. So definitely in play. Thanks for the question. Next up, Prabish, do I look for any boats that are left out when the tide is already up? So laggards, right? And play the possibility that they will raise. Prabish, I will think about that sort of as a second choice. I mean, I'd rather play boats that are more in sync with the tide. However, if none of those boats are within striking distance, then what we'll do is we'll look for what's left, right? And if it's a laggard boat, as long as the structure is not a downtrend when the overall tide is up, maybe it's neutral when the overall tide is up, at that point, what we can do is just consider the probability that the rising tide is going to lift even laggard boats. So yes, I will, but not initially. It's not the initial preference, but it is a secondary. All right. Thank you for the question. All right. 10 and 30 year. We want to continue to find opportunities to short the rip. Neither is even within the neighborhood of the zip code of what we're looking for, but we've had a bearish take on this. Look at the red grab candles. Look at the structure of the JT multi-trend. Look at how long we've been south of the 200. So yes, Stephen, I do want to short rips. We just need an opportunity. That's really it. But whatever your approach is to getting short, remember that we want to take advantage of just having that bearish directional bias. So yes, there might be numerous ways, different strategies that can get us short. It doesn't have to be just mine. But I think as long as we're looking to the short side as the dominant path of least resistance, we're in good shape. And the same goes for the 10 and the 30. All right. Next up, Brian, do I trade futures in my sector secrets mastery or just primarily sector ETFs? So Brian, I trade futures in the futures room. That's primarily what I do with my time there. And the sector secrets mastery is about ETFs. It is about ETF and stock options. However, let's say, sometimes those two worlds mesh. So Brian, if I were trying to explain futures and options at the same time, I think a lot of folks would end up being extremely confused. So what I try to do is pick the best clarity that we can find and the market most traders tend to want to focus on. That being said, if I am trading, let's go back to that question earlier about that Stephen had about the 10 and 30 year. If we're looking at ZN, that would turn into an IEF setup in the mastery. So this is where the setups in many ways overlap and you can choose your own adventure. In other words, if I'm setting up gold and we've got GLD and you know what my triggers are in GLD, you can trade GC, MGC, GLD, calls in GC, right? So this is what I call choose your own adventure. Once you know what the triggers are, how you want to execute the trade, how you want to express that idea based on the trigger levels, that's up to you, right? That's the cool part. If traders want to buy the underlying GLD and not play calls, all of that is fine. All of that is fine. So I don't want traders thinking that if we're setting up a trade in QQQ, that you cannot short NQ or that you cannot play NDX. You can. In fact, it cracks open looking at XLY, XLK, XLC, and the individual stocks. So once you understand this boat and tide mentality, not only can you play the alternatives in different asset classes, the options in the ETFs, the options in the futures, maybe even the futures themselves, maybe even the actual ETF, right? You can even start looking at offshoots of that. So once you understand the connectivity, the simple answer is, no, I'm not going to set up and send a natural gas futures setup, but I will set in sector, but I will send out a UNG trade. And if you know where I want to get into UNG, well, the easy translation is, well, now I know where Raghee wants to buy natural gas futures, calls and natural gas futures, calls and UNG. This is 6 of one, half dozen the other, as far as I'm concerned. So this is that choose your own adventure. I hope that explains it. I get that question a lot. So I really want to be frank, gang. If every setup was 4 different alerts, minis, futures, options, it would just confuse and I would never get any trades out because now we're sending 4 iterations of them. So the way we fix that is have a touchstone setup, have a main setup, know what those triggers are because you're going to get the triggers ahead of time from me. That gives you time to say, all right, Raghee's taught me how to understand that I can choose my own adventure. I'll choose the way I want to execute the trading idea. Maybe I want to buy the underlying. Maybe I want to play the futures. That's your choice. I mean, you have now the information that you need to be able to go do that. So thanks for the question. It is one that I get a lot. And by the way, the best way to understand what we're doing in the mastery is, check out the webinar that we have here. It's going to be up for a little bit longer. The promotion ends Friday and we start the bonus session on Monday. Come check out for a month what we're doing. You'll know very quickly whether or not I'm the right mentor and I have the right strategy for you. And it's really, for me, in that month, in any time that you all spend with me, the whole idea is to give you distinctions that regardless of where you go from there, you're going to be able to handle the markets in a better way. That is always the goal, regardless of whether you spend 20 minutes with me here in Charts and Coffee or the next year with me in the Sector Secrets Mastery or even Simpler Futures, right? The goal is, you know what my mom always said, leave something better than you found it. And I think that's always the goal with everything that we do here at Simpler. We really want to give you all information to, well, as one of my mentors said, the knowledge to seek out more knowledge. And by the way, in vein of that, definitely head on over to countdowntrader.com. We have all sorts of information there. All right. Head on over to countdowntrader.com. We have a lot of not just free downloads for you to check out, but also ongoing analysis about what we're doing in the markets. All right. So with that being said, I got to go. I'm going to head on over to our Mastery weekly Wednesday sessions. Looking forward to seeing our Mastery folks there. As always, thank you for joining us for Charts and Coffee. Caffeinate and dominate, my friends. Be good to each other.